What is up, everybody? Why Invest Wednesday? We're over on TikTok, uh, Facebook, and YouTube. So excited to have you guys here. Here's what we're doing. Um, we are getting ready for this. For some reason, we got some issues. So let me get that back up and running here. Oddly enough. All right. Well, we're just going to roll with it. So, how are we doing today? Thanks so much for tuning in. We are going to talk about something massively important to you, Colorado homeowners, to people purchasing in Colorado. Insurance premiums have absolutely gone through the roof. So, Colorado homeowners just got punched in the face by insurance premiums. And according to one major 2026 report, we had the biggest home insurance increase in the country last year. But the dangerous part isn't just the higher bill, it's what people are doing to try and lower it. So essentially, what we have to understand is insurance is something that is required by every single mortgage that I've ever seen come across the table. And in Colorado, we are having, in 2025, rates increased 18.3%. That's the largest single year increase in the country. So from 2020 to 2025, Colorado home insurance rates rose 100.8%, meaning they more than doubled. Colorado's average annual homeowner's premium is now listed around $4,310, third highest in the country. So cutting through the noise, yes, you should be reviewing your insurance. Yes, you should be shopping it. But no, the answer is not to gut the part of your policy that protects your net worth, right? We talk all the time about building wealth on this platform, and we need to make sure it's protected. In Colorado, the big, insurance claims, obviously, outside of being, leading the country in car thefts, which is really odd to me. I'm not sure how that happened. You have to understand we're having hail claims on roofs, and the fire danger is obviously rampant. No longer just up in the, hills like it has been for a good amount of time, but also the foothills. We had the fire in Superior a few years back that absolutely devastated, people's homes and truly affected their wealth building. And so we have to look at this. And, if you are interested in talking to someone, I have some super creative insurance agents that can help. But the bottom line is those insurance agents are people that I know, and they understand the importance of being covered, right? A roof, $10,000 to $20,000 or even higher if you're, in a bigger home, is something that we absolutely need protection. There is some things that we'll talk about in a little bit that people are doing. So if your insurance premium jumped last year, comment your county or reach out before you make a move in or out or around the Denver metro area. And insurance is now a part of the housing affordability conversation. So let's make sure that we're having that rolling. So this is not just your carrier is greedy. The truth is that nationally homeowner insurance has risen 46.8% cumulatively from 2020 to 2025. Colorado rose 100.8% over that time. So we need to be very aware of what exactly is going on, in that 5-year stretch, right? Because that coupled with some of the Tabor stuff being dismissed, some of the tax stuff being dismissed, in Colorado from a property tax side, these are the things that, are pushing your mortgage higher and higher because we push so hard for the 30-year interest rate. We understand that that's fixed and that's, what everybody's comfortable with after the great crash of '08. But now we're seeing insurance premiums and taxes, push those mortgage payments higher and higher, even though we're in a fixed, rate. So this is not just one bad renewal notice. This is a structural affordability issue. And so insurance companies are pricing future risk, not just your personal claims history. And it's done by zip code. And I'm not the insurance expert, but that's the thing. Like I've had people say, well, I'm not going to get a roof because I don't want my premiums to go up. The truth is, if everybody around you is getting a roof, it's all based on your neighborhood. It's all based around your location. And that's something that we absolutely have to take into account. Your premium can go up even if you never filed a claim. And then you have all kinds of different things. And I won't go into my insurance stories, but there's a reason that I have some new creative insurance friends that can help make this a win-win for both, right? It's not going to be the cheapest thing in the world. It's always going to be a cost that we have to pay, and it's not the funnest thing to pay. But when you do have the coverage correctly, it makes for a much, better life in the end. So the thing that frustrates homeowners is it feels personal, right? The Clue reports and going into it, you have insurance, you pay for it, you file a claim, you file another claim, and then all of a sudden they want to cancel you, right? That's what frustrates homeowners because it feels so personal. But it is usually tied to the regional risk. The reason that the entire state's insurance went up wasn't because, your neighbor filed a claim and so did your other neighbor and you decided not to. The reason it went up is because we obviously have hailstorms, right? Middle of June, we have to get the front loaders out to, clear hail here in Denver a couple weeks ago, right? So then you add on top of that the fire danger, the rebuilding costs, the roof losses, the reinsurance costs, and the disaster exposure. That's really where it's at. So you can be the cleanest homeowner in the neighborhood and still get punished because Colorado weather has the emotional stability of a toddler with a kazoo. And if you have any of those toddlers at home, insurance is just as important. The big surprise, hail is the main villain, not wildfire. This is the key wait what moment, because obviously wildfire, is a whole rebuilding cost and all of that. The Colorado Division of Insurance reviewed data from 20 homeowners insurance carriers representing about 80% of the market. The state found that hail accounts for 26% to 54% of total homeowner insurance premium, depending on the county. And so that's absolutely the case. Part of these stats, hidden in these stats, is the fact that if you're in a major fire zone, it's next to impossible to get insured. I've had one in Buena Vista where I had to, map out the entire neighborhood and where the fire hydrants were and all of that. Turned out it was okay, but insurance companies are just saying no to certain areas in there. So that's why that stat is like it is. Along the Front Range and Eastern Plains, hail accounts for approximately 50% of the premium homeowners pay. Wildfire risk accounts for 0.9% to 24.6%, depending on the county. Denver only sees about 1% of premiums tied to wildfire risk, according to the state's example there. So we have to really understand that. Wildfire gets the headlines because ultimately that's when it's just like you can't get it, or in those high risk areas, there's definitely that. Hail gets the bill. This matters because Denver Metro homeowners may assume this is a mountain wildfire issue, but Front Range hail is one of the biggest cost drivers. Even mountain communities that do not see as much hail are still paying for hail risk across the insurance system. Wildfire is the fear, hail is the invoice. Colorado weather is now an insurance math problem. NOAA reports Colorado had 76 confirmed billion-dollar weather climate disasters events from 1980 to 2024. Of those, 42 were severe storm events and 12 were wildfire events. The long-term average was $1.7 billion events per year. But from 2020 to 2024, that average jumped to 4.4 per year. Shorter time frame, and obviously the claims keep going. Insurance companies are not just reacting to one storm, they're repricing based on a pattern. The truth is insurance companies don't like losing money. Hail, wind, fire, labor costs, material costs, and replacement costs are all feeding into the same problem. This affects homeowners directly because it also affects buyers and sellers and investors, right? Sellers are affected because buyers' homeowner insurance premiums are going through the roof. For instance, if you're living in the foothills, or I'm listing a house up in Jefferson here in the next couple of days, you have insurance. They're holding on to you. But I've seen it where that same insurance carrier, when it's switching over and it's not one of their long-term clients, they're just saying no, right? So that's how this really affects people. Sellers often say, well, they can just use my company, and that's just not the case all the time. From an investor lens, insurance is no longer a minor line item. When underwriting a rental, a second home, insurance deserves the same attention as taxes, HOA fees, vacancy, and maintenance. A deal that looks good on price can get wrecked by insurance costs. And so especially coupled with the higher interest rates. If you're using, leverage to purchase some of these, it's definitely something worth talking about. For the most part, that gets passed on and, annual increases and things to the renters. But we've all heard the stories about, rent control and those kind of things, and a softening rental market. So how long are we going to be able to pass that increase year after year on to these people is, because obviously vacancy rates can't be super high if you have a mortgage to pay and all of that. So why this matters to buyers right now: buyers should not wait until the last minute to get insurance quotes. When I'm writing offers, I am, putting that date probably 10 days in and telling people day one, hey, contact the insurance carriers. Let's see, because I know that some buyers are shopping on, their max, affordability based on their comfortability in their budget, right? So if we're going to a lender, they're going to run a general idea of what the insurance premium might be, and you get in a weird pocket or something, and all of a sudden, who knows what happens. So insurance can affect monthly payment, debt to income ratio, and overall affordability. In some higher risk areas, availability can be just as important as price. So a little buyer checklist for you: get an insurance quote early in the contract period, ask about roof age, roof material, prior claims, wildfire scores, hail deductibles, wind, hail deductible, and replacement costs. But the biggest thing is roof age and that roof material, because you can, get a pretty significant discount if it is a class 4 shingle in most neighborhoods. Just depends on the insurance carrier. But as someone who's owning a home, keep that roofing paperwork that you pay so dearly for, so that we have that and it's easy to access. Because a lot of times when people are getting ready to list their house, that's the first thing that goes in the trash. That is a key document to keep if you're thinking about, selling your home, so that we can say, hey, this is a class 4 shingle. Because getting up on the roof and looking at it, sometimes doesn't do it justice. So that paperwork is of utmost importance. If you are a homeowner not thinking about selling, keep it, file it away. It should be just as, available as some of the other disclosures and things that we offer here, because it will really help, the other side out. So ask about all those things. Do not assume 2 homes at the same price will insure the same way. There's a lot of different factors that go into it. For mountain and foothill risk areas, ask about insurability before falling in love with the view. This is huge, because yes, the home can be insured, but if we're talking about the major carriers, the bigger box, sometimes you have to go to private carriers, and that can get very expensive. The mountain view is cute until your insurance quote walks in wearing steel-toed boots, right? So a buyer's insurance quote can sometimes become a deal issue and can kill a deal, especially if people are on that fine line, whether it's the approvability maximum from their lender or it's just their budget, right? They're coming into the home, they're paying the high interest rates, the taxes are already up, they're just paying more in all the ancillary costs, including the higher mortgage or the higher cost of the home. So if your roof is old, damaged, or has questionable documentation, that can really affect buyer confidence. New roofs are a great selling point. For sellers, the talking points are, gather those roof permits, receipts, insurance claim history, like I said before, any warranty details before you list, because the truth is, the better the roof, the higher the class, all those things, the more of a discount that could be applied, and maybe even have some options to, there's this one company that offers, basically it's like an Aflac for roofs. So you don't have roof coverage on the major policy, but you do have coverage for replacement value, based on this ancillary coverage. So there's ways to get creative if it's just unbearable, and watch those deductibles. For those of you that have long-standing insurance policies, when they send those renewals, sometimes they sneak in those increases. That's a big deal. And even if you've had mitigation work, you lost a shingle or something, document it, make sure you have it so that people know, and mitigation work for your fires, right? Document all of that, before and after pictures. I know when I bought my house in Grand Lake, they removed like 250 trees from the property over the 365 days before. So sellers should expect buyers to ask more insurance related questions and be ready with the documentation than they did 5 years ago, because it is such a cost, and every little discount does help. This is not just about price anymore. A clean insurance story can help your home feel safer to a buyer. A messy insurance story can create friction, delays, credits, or fall through risk. And we all know that's a big deal, especially when we get excited and go from there. So that is huge. So why does this matter to homeowners who are staying put? You say, Jeremy, I'm watching this. I'm not going to sell anytime soon. This is where you make, your due, right? Homeowners should review dwelling coverage every single year. I offer annual reviews for my clients. If you're interested in that, comment annual review. We go through your loan, we go through your insurance, we go through, any improvements you want to make to the property, and then we go through kind of your equity use and how you want to use that. It's not a push to sell, but we need to make sure that you're talking to somebody who understands the dwelling coverage and the replacement costs, because if the home goes up in value, say you put a lot of improvements into it, we need to make sure that you're properly covered, because things happen. The roof coverage matters. When you have that little opportunity, when you have an insurance claim to get class 4 shingles for $1,000 or $1,500 more, first of all, check what it would save you on your insurance policy, but also what it would save others, because this is something that could be huge. Watch that wind and hail deductible, like I said earlier, personal property coverage, and loss of use coverage, right? Especially for rentals and those kind of things, you can't use that. There is coverages for those. Personal liability, obviously. Umbrella policies are huge. And discounts and bundling. Know those things, know those factors, especially if you're getting a new roof and you plan to stay where you're at. Mitigation credits, if there's any forestry programs or anything like that, definitely take advantage of those things, and at the very least, document, right? And make sure that once a year you're going through your home. We have these cool cell phones now. Go through your home, take a video so that you're inventorying everything in there. That's a key point in this. As we add more and more TVs and more computers and more things, just take a home inventory. You'll be happy you had it if some unforeseen circumstance occurs, right? A lower premium is not automatically a better is not a better policy. So make sure you're talking to a human. You're not falling for the clickbait and going through it and getting the best rate possible, because they are taking money from somewhere. And sometimes it comes in your, deductibles. Sometimes it comes in your maximum, coverage, those kind of things. So there's a difference between trimming the fat and cutting bones, save money, or accidentally making yourself underinsured, right? That's not a risk worth taking. So do not raise your liability exposure just to save money. This is the heart of my point here. We need to make sure that we are doing what we have to do. I'm a real estate agent, not an insurance agent. But if you need somebody that you just want to look over your policies, I promise you I have people that won't just sell you. I have great insurance agents that say, yep, you're all good. That's great. If you're one of those insurance agents, shout out to you. Comment below. I'm happy to help. I'm happy to add more, because this is such a big deal in the affordability chaos that we're under. So really make sure you're good to go. Insurance also protects your liability. So homeowners insurance just isn't just to protect your structure alone. It also protects you if someone is injured or if you're found legally responsible for damage. Many policies start with liability limits around 100,000, but many homeowners should be looking at higher limits, often 300 to 500,000, and potentially an umbrella policy depending on assets. So if you own a home and have equity, you own rentals, have savings, have a business, or have future income worth protecting, liability coverage absolutely matters. Cutting liability to save a few bucks can be a terrible trade. So the more assets you build, the more liability protection, the more you need to talk to your insurance person, right? Real estate is supposed to build your wealth, not turn you into one trampoline accident into someone else's wealth. And we have to be very careful about that. And that's the number one reason my kids can't have a trampoline. So if you're watching out there, ladies, that's the answer, right? So auto liability, this is a strong supporting example because people understand car insurance, right? Colorado minimum auto liability limits are about 25,000 bodily injury per person and 50,000 bodily injury per accident and 15,000 for property damage. In 2024, the average bodily injury liability claim was 28,278, already higher than the minimum per person bodily injury requirement. And that's why we can't just go online and click on these premiums and pick what we want in these coverages, because sometimes it's hard to understand. The human element will help. I mean, if you're up for it and you take all your data off there, throw your, insurance documents into ChatGPT, see what they say, right? You never know. Use AI, that's fine. But at the end of the day, having that human that understands that, it's going to be there to bat for you. It's going to be there to ask you, every single year if anything's changed or anything like that, to have that meeting and go through it is absolutely important. The average property damage for those liability claims was $67.70. In 2023, more than 1 in 7 drivers nationally were underinsured. Colorado had the highest underinsured motorist rate in the country at 49.7. Legal minimum does not mean financially smart. If you cause a serious accident or someone else causes one and they are underinsured, weak coverage can expose you and that wealth that you've worked so hard to build. The same principle applies to homeowners insurance. Do not weaken the liability side just to make the premium look prettier. Minimum coverage is like bringing a garden hose to a house fire. Technically, it's water. Practically, good luck, right? So better ways to save money without gutting protection. Shop coverage, apples to apples. Understand everything that's there, all of the liabilities, all of the maximums, all of the deductibles. The Insurance Information Institute recommends shopping around and getting quotes from at least 3 companies. And I recommend having a human at all 3 of those companies so you can really talk about it and see what fits you, because insurance is not a one-size-fits-all. It specifically warns you not to shop price alone because service and claims handling matter. When something goes wrong, you want to make sure you're there. Yeah, here's the deal. When we really look at it, we have same dwelling coverage, same deductibles, same roof coverage, same liability limits, same endorsements, same replacement costs, assumptions. And if you're comparing apples to apples truly across those, then the price is where you go. Otherwise, you're not comparing prices, you're comparing different levels of protection. So use deductibles strategically. Raising deductibles can lower premiums, but only if homeowners can actually afford the deductible after loss. And so higher deductibles can absolutely, look really cool when the premium comes across. But when something happens and you basically are paying your entire deductible for a roof claim, you might as well, protect yourself a little bit for a rainy day, literally, or a haily day, I guess. Raising a deductible from $1,000 to $2,500 may be reasonable for someone with cash reserves. Moving to a huge wind and hail deductible without understanding the math can create a nasty surprise. If that's happened to you and you got stuck in a hailstorm, let me know. I do have some reputable roofers that can take care of you as well. So higher deductible is not automatically bad. An unaffordable deductible is what is really bad. So bundle but verify. Bundling home and auto can reduce premiums, but as you go, you still need to make sure that the combined price is actually lower than buying separately. So bundling can work, loyalty can work, but blind loyalty is expensive. Review every year or 2, especially after big renewal jumps, especially after, large asset jumps or, a real estate market like we saw 3 or 4 years ago where things were escalating quickly. Ask about every discount possible. Multi-policy, claims-free, security system discount, smoke detector and fire alarm discount, deadbolt discount, new roof discount, impact-resistant roof. That's what I talked about with the Class 4. Water leak detection, updated plumbing, electrical HVAC, smart home monitoring, senior retiree discounts, veterans discounts, paperless and auto pay. Just go for it all. NAIC also notes that premiums vary widely by companies and depend on location, age, type of building, use, fire protection, deductible choice, discounts, and amounts of coverage purchased. So just make sure you are taking full advantage of this. And last I checked, you can't ask a form online how to do that. So make the home more disaster resistant. Reinforce roofing, better roofing materials, fire mitigation if you're up in the hills or have any vegetation close to your house, defensible space. Updated systems and documentation can absolutely matter, so make sure you're storing that in a safe place. So for Colorado specifically, HB 25-1182 became law, requires more transparency around wildfire risk mitigation and models, mitigation discounts, wildfire risk scores, classifications, and appeals. SB 26-155 also became law, creating the Strengthen Colorado Homes enterprise using fee revenue, primarily grants, to help Colorado homeowners retrofit homes with resilient roof systems. At least 85% of fee revenue must be used for grants, and beginning in 2027, the fee is 0.5% of total premium collected by insurers, with insurers prohibited from surcharging that fee directly to the policyholder. So what's that mean in plain English? Colorado is moving toward a system where mitigation, roof strength, and risk documentation matter more. That does not mean instant relief tomorrow, but it does mean homeowners should start paying attention now, making sure you have all that documentation. If you're getting stuff going now, maybe look into those and some of those, opportunities. So what to ask your agent, right? What is my current dwelling coverage? Is my policy replacement cost or actual cash value? That's a huge one that we run into sometimes in condos. Do I have a separate wind and hail deductible? Is my roof covered at replacement cost or depreciated value? What is my personal liability? Should I consider an umbrella policy? What discounts am I missing? Would building help or hurt? Bundling help or hurt? Would a higher deductible save enough to justify the added risk? Or would a new roof or impact resistant roof change my premium? Is my wildfire risk or hail risk score affecting my price? Do I have the right coverage if I rent this property out? That's a huge one, short-term, long-term. You have to, be on the up and up with that. Am I covered if the property is vacant during a move? Your insurance agent should not just be quoting cheaper. They should be explaining risk, and they should be having all of those conversations with you. And what real estate investors need to really look at is you cannot analyze cash flow using old insurance numbers. Property that worked in 2020 may not work with 2026 insurance costs. Investors need to stress test premiums, deductibles, vacancies, maintenance, taxes, and HOA costs together. Quote insurance before writing or during early due diligence period, because it's massive, especially if you're getting in some of these older apartment buildings and things like that. For short-term rentals, make sure you have the right policy type, right? For long-term rentals, landlord policies do matter. If you're house hacking, clarify owner-occupant versus rental exposure and how that's looking. Just be upfront and honest, because we want to make sure it's not about being cheaper. It's about being fully covered, especially if you're on the investment path. For mountain properties, insurability may be a bigger issue than rate. Condos, townhome investor, HOA master policies, costs can indirectly hit you through dues and assessments. That's the number one reason our HOAs are absolutely out of control. Insurance used to be a line item. Now it's a deal filter. So as lowering liability limits without understanding asset exposure, raising deductibles with having the correct cash, ignoring roof coverage language, assuming new construction is always cheaper to insure, not reviewing coverage after renovations is a major one that I see in the real estate side, not telling the carrier about major upgrades, not documenting mitigation work, waiting until closing week to quote insurance. This is all things that I see. Assuming I have insurance means I'm properly protected is the biggest problem. So all of those risk factors are something we need to be paying attention to as homeowners, and that is for sure. And so let's bring this all together. Colorado insurance premiums are rising fast. The headline is real, but the deeper story is more useful. Stop and focus in on some of these things. Take some time to review your insurance policies, just like you review your stock accounts. Hail is a major driver, especially along the Front Range, as we know. Insurance now affects affordability, buying power, selling strategy, and investment returns. So this matters to homeowners, home sellers, home buyers, renters, and everything in between. The answer is certainly not to panic. It is not gutting liability. The answer is strategy, shop smart, compare apples to apples, document mitigation, review deductibles, and protect your assets. If your premium jumped, or you're trying to buy or sell, invest anywhere in Denver, Metro Colorado, or Northern Colorado, reach out before you make the move. And if you have questions about Denver, the suburbs, or the areas you're exploring, send them my way. Insurance is officially part of the real estate conversation now, and I will get you to the right professionals. Pretending it is not is how people get blindsided, and that's the last thing I want. So drop your county in the comments. I want to see where you guys are coming from. We can have these conversations. Shoot me a DM if something I said shocked you or concerned you, and we will definitely have those conversations. Until next time, we will see you next Wednesday.